So, as I said, thank you so much for being with us for LABC's California Insurance Commissioner Candidate Forum. This forum comes at a pivotal moment for California. In the next election cycle, Californians will choose new statewide leadership, including a new governor and a new insurance commissioner. At a time when the state's affordability, climate, housing, and infrastructure challenges are becoming more urgent and more interconnected, California is also operating within a strained federal partnership with growing uncertainty. I love that chuckle. Excuse me, one is being euphemistic. Yeah. Okay. With a strained federal partnership with growing uncertainty around disaster recovery support, climate investment, infrastructure funding, and the long-term stability of programs that communities and businesses rely on. So that makes state leadership even more important. California has always lived with natural hazards, but the scale and frequency of today's climate impacts are testing systems that were not built for this level of risk. Wildfires, extreme heat, drought, flooding, and aging infrastructure are no longer separate challenges to be put off for the future. They compound one another, and the costs ultimately land on households, businesses, utilities, local governments, and insurers. Insurance is where those risks are priced. It's where those risks land. When the market begins to pull back, it is a warning sign that the underlying risk is becoming too expensive, too uncertain, or too poorly managed. That should concern all of us. A community cannot build if residents cannot insure their homes. A business cannot invest if coverage is unpredictable. A housing project cannot move forward if insurance and financing no longer pencil out. For LABC, this conversation is more than just about premiums. The next insurance commissioner will impact whether California can organize itself to reduce risk before disaster strikes, whether it can invest in the infrastructure needed to withstand a changing climate, and whether it can keep the state affordable enough for people and businesses not only to stay here, but to thrive here. The position requires serious leadership, coordination across agencies and industries, and a willingness to confront the real costs of climate risk and long-term resilience. Today's forum is an opportunity to hear how each candidate would approach this responsibility and help build a more resilient, affordable, accessible, and yes, insurable California. And with that, I'm pleased to turn this over to our inimitable leader, Mary Leslie.
I like that. Thank you.
And then we put this over here.
Thank you, David. And for the LABC, the January 2025 Los Angeles wildfires showed us in the clearest possible terms how deeply insurance affects recovery, rebuilding, and resilience. Together, the Eden and Palisades fires destroyed, and I know you know this, more than 16,000 structures and caused an estimated 76 to 130 billion in total property and capital losses. As of March of 26, the California Department of Insurance reported nearly 49,300 insurance claims for a total of 23 billion paid to date. Those numbers underscore a simple truth. Insurance is one of the largest and most immediate sources of recovery capital after a disaster. It is critical to the safety and resilience of communities on the effectiveness of the insurance community being there for each person in business and as residents. Late last fall, the LABC honored 17 local community-based organizations that helped with the businesses and with residents, and many of them are here today. And I think all of them have the same thought. We really want to understand better from each of the candidates, and thank you all for being here today. We want to understand better how you would increase competition in the California market, improve claims handling, protect consumers, expand access to coverage, support recovery, and work with state and local partners to build a more stable and reliable insurance system for the future. And with us today are the top candidates for insurance commissioner. We're very excited to have California Senator Ben Allen with us. Yay. Former California Senator Stephen Bradford. Civil rights attorney Jane Kim. Licensed insurance professional Stacy Korsgaden. And financial analyst Patrick Wolf. Thank you all. And we're very honored to have Alex Cohen with us, the Emmy award-winning journalist. She does a fantastic job moderating. She moderated last month for us a governor candidate forum and did an exceptional job, and we had an outstanding conversation because of it. I'd also like to say that LABC has partnered with LA Times Studio today. We will be recording today's Insurance Commissioner Candidate Forum. It will stream online at the LA Times Studio platform starting tomorrow. It will run through June 2nd. Feel free, any of the candidates, to let your constituencies know. They can see the conversation you had today. And with that, I welcome Alex Cohen and the candidates to the stage.
Ask our candidates to line yourselves up in alphabetical order to my left. So we'll have State Senator Ben Allen, former State Senator Stephen Bradford, Civil Rights Attorney Jane Kim, licensed insurance professional Stacy Korsgaden, and financial analyst Patrick Wolf. Thank you for playing musical chairs.
I think
Are you here?
Yeah.
Sorry. Thank you. And there's a reason why. We'll get to that in a moment. But first of all, I would love to thank Mary and the LA Business Council for having me here today. We're going to be very frank. Insurance commissioner may not be the sexiest race out there right now, but I think sexy candidates for sure. All right. But I think you could easily make the case that this is probably one of the most important races that we've seen on California's ballot for quite some time. Before we get started here, a couple of housekeeping notes. Considering the lack of extensive polling for this particular race, LABC invited candidates who had met a fundraising threshold rather, of $80,000 by the date of March 1st. I thank you for giving that warm welcome to our candidates. I'm going to ask that we refrain from applause or any audible response until the end of our entire conversation, and that's to ensure we can get through all of our important questions today. So, to ensure balance, we are going to be rotating the order in which questions are asked so that each of our candidate will be able to provide the first answer at least one time. For most of our questions, candidates will each have up to 60 seconds to respond. For some of them, we'll have 90 seconds. We have a human being as a clock today here. Our thanks to Olivia. Everyone see those signs? When you see 30 seconds, you have 30 seconds left. When you see stop, you stop. If need be, we will ask follow-up questions. All of you had gathered with us today in person. If you have a question for our candidates, please be sure early on in the program to write down that question on the index cards you have there at your table. We will be collecting them and hopefully folding them into a conversation as time allows at the end. Candidates, I am here to remind you this is not a debate. This is not a time and space to attack others, but rather an opportunity to platform your vision. We ask you not to invoke the names of other candidates in a disparaging manner in your responses. So, with all of that housekeeping aside, we're going here in alphabetical order, starting with Senator Allen. And in lieu of opening statements, we'd like you to introduce yourself to our audience through the lens of this question. Why are you running for this position of insurance commissioner? And what, in your experience as a consumer of insurance here in California, qualifies you to oversee the state's insurance markets? You have 90 seconds for your answer. Senator.
All right, well, good afternoon, everyone. Thank you for being here at a part of this really exciting topic, insurance and insurance reform. I'm somebody who has been serving this community and others in the state legislature for over a decade. I've got a long track record of success getting difficult bills through on environmental protections, consumer protections, ethics, transparency, political reform. I'm also somebody who represents a major portion of the fire zone, and I got a chance to see the dysfunction of our insurance system up close and personal in the wake of those terrible fires, helping hundreds and hundreds of people get the payouts that they deserved in the wake of the terrible conflagration. But I was proud of that, but I also thought to myself, why is it that you have to go to your state senator in order to get help? Why can't we get a call back from the Department of Insurance? Well, it turns out there's only 34 folks handling those calls in the whole state. That's less than 1 per 1 million Californians. Over time, I've developed a sizable legislative package relating to protecting consumers, making the system work better for people. I got a big bill through to increase the payouts in the wake of total loss for contents coverage. We're now working on legislation to penalize unnecessary delays in payouts. We're working on legislation to ensure that people are given more time before they're non-renewed, and that there's a science-based independent set of standards associated with smoke damage. But we also know that in the long term, we have to reduce risk. And I'm working on legislation to create a state-backed low-interest loan program to help people harden their homes and to encourage communities to focus on risk reduction. So, yeah.
We will leave it there. We'll have more on that later on. Stephen Bradford, 90 seconds to you.
Thank you and welcome to thank you for this opportunity to be here this evening. My name is Steve Bradford, and I've spent the last 26 years of my life not as a politician, but as a public servant. And what has led me to this position of insurance commissioner, I was actively recruited by my constituents, by my colleagues, by business, by labor, by various consumer groups who said, Steve, we've looked at your record of delivering tough issues, tough solutions, and this is what we need right now in the insurance department. This is not a legislative job. This is an administrative job, and it requires someone who has solved tough problems. I chaired utilities in both the Assembly and the Senate. It required me to work with the regulators, the PUC. It required me to work with the consumer groups like Greenlining and Turn. It required me to work with the industry itself. And we were able to reduce rates for consumers throughout California. We were able to provide a variety of services that didn't exist. I grew up in an insurance household. My father sold life insurance. So I saw at a very early age the importance of insurance and how that is the connective tissue to everything that we do in life. You can't buy a home without insurance. You can't drive a car. You should be driving a car without insurance. Some folks do. And you can't operate a business without insurance. So we need insurance to stabilize our industry, to make sure we can make sure California is the successful, sustainable state that it has been. And I will be that strong advocate to make sure that we have transparency and fairness.
Thank you, Mr. Bradford. Next 90 seconds goes to Jane Ginn.
Good afternoon. My name is Jane Kim. I am running to be our California Insurance Commissioner, which, as was stated, oversees a $3.3 trillion industry with zero federal oversight. I'm running with someone who has experience working both statewide and as an elected leader, an attorney, and as an organizer. I spent the last 4 years as the California Director of Working Families, where we not only work to elect candidates up and down the state, but work to advocate for policies that protected tenants and consumers and small business owners. I spent a year also working for Senator Bernie Sanders across the state. And prior to that, I spent 12 years as an elected in San Francisco on the San Francisco Board of Supervisors and School Board, where I'm really proud to have passed the most legislation of any member of the board, despite being a minority on the board. And I did that by building coalition and working with labor, with businesses, with constituents across the city to pass landmark legislation like making San Francisco the only city to make community college tuition free and passing a $130 million annual revenue measure that is subsidizing childcare for every family in San Francisco. I believe that we're not electing the next actuary. We're electing someone who can solve the insurance crisis. And that is going to mean someone with political leadership, with policy chops, and also someone who can build coalition across the state, which is why I'm proud to have been endorsed by close to 150 local elected officials from San Diego to Northern California, and some of our biggest labor unions like SEIU, teachers, and nurses. Thank you.
Thank you very much. Stacey Korscott, 90 seconds.
Hello, everybody. My name is Stacey Korscott, and after graduating from Cal Poly San Luis Obispo in business management, I opened up my insurance firm. And that was in 1988, and became nationally recognized across the country for number one, being one of the larger companies or firms in my company, but was recognized for servicing the customer. And I am in this race because I served the client before, during, and after a claim. And right now, you can't get a policy and it's not affordable. Last night, it was just announced that the FAIR Plan is looking at raising the rates 29%. And I've traveled the state and I've looked at people's eyes. I've talked to families, seniors, and younger people. They're desperate. This is a very, very important race. The moderator is correct. I can step in from day one. I know how to fix it. I know it's broken. And the bottom line is it is going to come with the free market. In California, we have a great way of taking businesses and saying, go to different states. It's not going to happen with insurance. We're going to open up a new business division. We're going to open up the lane for new capital and insurance to come into the state. So you have a variety of companies to choose from and to compete. At the same time, I will work with the legislature and the governor. We've got to lower the risk. We didn't have this risk, the fire risk, decades ago. We didn't have the, I'm sorry. We didn't have
we've got to stop there.
Thank you so much.
Patrick Wolf.
Hi, thank you very much. I'm Patrick Wolf, lifelong Democrat, but I've never run for elected office before. I've spent the last 10 years getting very deeply involved in state and local politics as an advocate, as a volunteer, supporting candidates, serving on public boards. But this is my opportunity to step forward because I think we need something different for insurance commissioner. You know, this is a role that historically has been filled either by a politician looking to use it as a springboard to the next thing, or by someone from the private sector looking for a way to get into politics aiming for something higher. I'm not going to run for any other elected office. I'm not going to run for anything else other than insurance commissioner. I'm not going to serve in the insurance industry in any fashion whatsoever. I'm not going to accept any corporate gifts while in office. I simply want to step forward and serve. And my campaign is based on the radical idea that it matters to have real insurance expertise. I spent 4 years building a home and auto insurance brokerage business early in my career from 2001 to 2005, and then worked as a financial analyst for the last 28 years, analyzing, investing in various companies and markets, including insurance. So I'm very grateful to have the opportunity to be here today. I look forward to the conversation. My name is Patrick Wolf, and if elected insurance commissioner, I will be a wolf on your side. Thank you.
Thank you very much. For this next question, we will once again have 90 seconds. We will start with Stephen Bradford. This is a question about market stabilization, and the question is this. California is facing a growing insurance crisis, with insurers pulling back from wildfire-prone areas and premiums rising across both the homeowners and auto insurance markets. Please tell us your practical, step-by-step specific plan to stabilize and increase competitiveness across the different lines of insurance business overseen by the commissioner. Stephen Bradford, we begin with you.
I think the first and foremost challenge is making sure that we modernize the Department of Insurance. There's a report that came out last month that clearly said the number one driver for non-renewals, increased premium, and people migrating to the FAIR Plan is the time it takes to get a rate approval in California. As business people, you all know time is money. It takes on an average of 305 days in California. There's only one other state that takes longer than California, and that's Colorado for a rate approval. So that's what I want to do from day one, is to modernize the Department of Insurance, making sure those 1,400 men and women who do this job on a daily basis have the tools and resources that they need to do their job in a more efficient and timely manner. And also expand upon the sustainable insurance strategy that has been implemented over the last year and a half, that now uses catastrophic modeling to better predict risk and set premium rates. We were one of only 2 states that wasn't doing that until last year. So I want to build upon that. We've already seen a downtick in FAIR Plan growth. It dropped by 25% enrollment last month, over the last 3 months, I should say. And we've seen a migration of companies coming back in California. Businesses need certainty, and right now they don't have that in California. We need to provide certainty. We need to provide more stability and for companies to want to feel comfortable about doing business here in California.
Thank you. Jane Kim, 90 seconds to you.
I want to separate the two concepts of building a healthcare marketplace and building more competition, because I think there's a myth that more competition leads to lower prices. And we don't have to hypothesize about this. We just have to look at the 49 other states, because the industry is regulated differently in each state. In states like Texas and Nebraska, where there's almost zero regulation of insurance and tons of competitors, they pay more for home insurance than we do. So more competition has not led to lower prices. In fact, what we're seeing across the country is that there's a race to drop as many of the riskiest home as quickly as possible. Now, we can also look at insurance programs around the world to see how they've addressed the crisis. So one thing that I'll say, there are 2 things that are driving the increased cost. One is that there's just this corporate drive to make as much money as possible. And this insurance industry is doing very well. It made $170 billion in 2024. That's net, not revenue. But second, there truly is increased risk. There used to be $1 billion storm every 3 to 4 months in the 1980s. And now there's $1 billion storm every 3 weeks. So the only way to make insurance more affordable and more available and to drive down price is to actually address the risk, which is why I'm proposing that we look at some of the models in other countries where they publicly run nonprofit, single payer or reinsurance programs that actually use some of the revenue from the premiums to drive down risk. They actually invest in resiliency and infrastructure. Travelers Insurance announced that they had $2.2 billion in excess capital last quarter. What did they do with it? They didn't use it to drive down our collective risk or to give discounts or refunds. They just gave it to their shareholders. Imagine if the state of California had those dollars to actually address risk. And that is what I've been proposing.
Thank you. Stacey Korsgaard.
So I've traveled the state of California and I've asked everyone that I talk to, why is this happening? Why is this happening? There's 2 reasons. Number one, we have a rising risk environment in California. We aren't logging. We don't have a timber industry anymore. Because of our environmental policies, we have stacked brush around our town. We had Prop 47, Prop 57. Anyone heard of smash and grab? Businesses have had to deal with that all over the state. So we have rising crime. So with that rising risk environment, like Senator Bradford said, we have 300 days where a company cannot change their rates. So if we have a rising risk environment, which in my opinion has been caused in Sacramento by the decisions, and then an insurance company cannot rate properly, that's a recipe for disaster. How do we fix it? We lower the risk. As an insurance agent, I told homeowners all the time, we can insure your home, easy, or it's not insurable. This is your punch list. This is what you have to do to become insurable. We can do that with the cooperation with the legislature and a governor to lower that risk. And I also have a plan, which I'm going to run out of time, but it's through the Fire Safe Council, like a Marshall Plan. We need to lower the risk, fire risk, very, very quickly. And we can do it through Fire Safe Councils, and every county has one. We're going to lower the risk, and we're going to bring in competition. Insurance companies, to be continued.
Thank you. Appreciate
Excellent.
that, Patrick Wolf.
Great, thank you very much. Before answering the question directly, I did want to clarify one point. It's important to know how to think about insurance risks accurately. The reason why Nebraska and Texas have higher home insurance prices is because they're insuring against different perils. They're insuring against convective storms and hurricanes as opposed to catastrophic wildfire, for example. So you really have to think carefully about comparing the relative prices and risks between different states. Now, my plan to address the question to stabilize the market is around 4 big ideas. One is holding insurance companies accountable. Senator Allen mentioned that we don't have nearly enough people addressing claims payment. Could not agree more. It's absolutely true. Part of the problem is the Department of Insurance is not adequately prioritizing its resources. It's a fairly well-resourced department, but I don't think those resources are spent in the most productive ways. We have to do a much better job holding insurance companies accountable. Increasing choice and competition. Could not agree with Senator Bradford more about the sustainable insurance strategy. We need to carry those reforms forward. There are some problems with how it's being done, but it is the right path. And we really have to reduce the time it takes for rate filings to be reviewed and approved. We do need to provide the certainty that businesses need, again, holding insurance companies accountable. Third, we need to have much more transparency. You need to know how insurance is operating in California. You need to know what the prices are, what the service is. I'll publish an annual report to show you. And then finally, we do need to reduce risk. There are things we can do to align incentives and make direct investment to bring the risk down, to bring the cost down.
Thank you, Senator Allen.
Yeah. Agree with much of what's been said. Obviously, we need more resources and more focus on the accountability measures, as has been mentioned, the rate review process being sped up. Insurance fraud has unfortunately become a major cost driver that is really harming the market and harming a very small group of people, are basically making it really terrible for everyone else. And we need to put a lot more resources into enforcement in that area. I also think that while I don't certainly go as far as what's been mentioned in terms of a massive expansion of public liability for insurance, I do believe that there are some spaces where we could think very tactically and strategically about having public engagement to help smooth over some of the massive inefficiencies in the market, public reinsurance, some sort of baseline public insurance. I think are ideas that deserve some study, but we have to make sure to do it incredibly carefully and certainly not in a way that will bankrupt the state. I also there's also some anti-competitive behavior that's taking place in the industry that needs to be addressed with regards to the agents and the extent to which a lot of them are limited in their ability to provide various options to their clients. That's something that's not permitted in many states, but we permit that behavior here, and that's creating some market rigidities that's harming choice for consumers. So from my perspective, it's about making sure we can open up the market a bit more, make it more competitive, but also be ready with strong public solutions to help smooth over some of the rigidities that exist, especially given how much the global reinsurance market is spooked by the risk profile that they see here in California.
Thank you. Our next question, we will begin with Jane Kim. You will once again have 90 seconds. This is a question about innovation. California has often been home to disruptors, people who believe that the status quo no longer works and instead create new systems, much the way ride sharing was born out of a frustration with the taxi industry. On a scale of 1 to 10, 1 being not much at all, 10 being incredibly so, do you consider yourself a disruptor? And if so, what creative approaches would you introduce to spark vibrancy in the insurance market? Jane Kim.
Well, if I'm going to self-rate myself, I'll put myself at a 7 or 8. Some people would probably put me at a 20. But I think it's a couple of things that I'll just say. The current system is broken. And so the rates are too high. They're canceling our coverage. And even if we have insurance, they fight our claims every step of the way. In fact, claims adjusters estimate that anywhere from $1.7 to $3 billion are stolen from Californians every year in valid claims that are denied, delayed, and underpaid, that they're contractually obligated to pay. So the DOI plays a very important role in making sure that the insurance industry plays by the rule. The second thing is that, I am putting some very different ideas out there that I think is worth exploring. Because as I said before, we have to drive down the risk and we need a revenue stream to do that. We can't just say the public's just going to keep paying for it. And so I'm saying that we should think about clawing back some of the premiums we're already spending that's going to this $1 trillion industry and actually plowing it back into our communities to drive down the risk. And these ideas may be considered different or expensive, but we already know that the current system is a failure and that it's too expensive. So we have to explore these different ideas. And the last thing I'll just say is, when I served on the Board of Supervisors, I oversaw 80% of the land use developments because I represented the downtown area of San Francisco during the dot-com boom. And I'm really proud of the fact that while I negotiated the most affordable middle income housing of any California legislator, I did that without ever voting down a deal. And while developers certainly gave more than they wanted to the community, they liked the certainty and that I was always had an open door, that I was always willing to talk, and I wanted the deal to happen. And that is the approach that I'll have with the job.
Thank you. Stacey Korsgaard, where would you rate yourself on the disruptor scale?
Well, I think it depends. I'll just say a 10 at this point, because first of all, Californians pay the highest rate of taxes, at least one of the highest rating of taxes across the United States. And I feel a lot of people don't think that we're getting the services. For example, we don't have water in some of our reservoirs to fight fire. We're paying taxes for services that we are not getting. So the disruption part would be the insurance companies. I would welcome them in to compete. And I don't feel that we should have a capture of their profits to serve Californians because we already pay in tax. Insurance companies give $4 billion to the general fund, and yet we are still not getting the services needed to have a safe California. So if we have insurance companies, we want to welcome innovation into the state of California, we're going to need to let that happen. And at the same time, we need to have an environment that's safe for them to come in and compete for every one of your businesses, whether it be home, small business, large business, property, etc. So we aren't doing that in California. Number one, and also I'd like to add in my short time here, I don't think this should be an elected position. Since 1990, we have not had anyone in this role that's had insurance experience. I believe it should be an appointment.
Thank you very much. Patrick Wolf.
Thanks. I'm gonna cheat a little bit. I'm gonna answer it with two numbers. I think from one perspective, I'm more like sort of a 3 or 4 in the sense that I really want to draw on things that have a sound basis in experience or have been proposed, and really only try to sort of push the envelope a little bit, because I think there's a lot we can do that's already been established. But I also think this can have an effect on more of a scale of a 9 or 10. So let me give you a couple of examples. One of the things I want to do is I want to publish a scorecard that's publicly available for every single insurance company on how they handle claims, okay? And you will have this when you're shopping or when you're renewing. Now, this is not a new idea. The Department of Insurance has been collecting this information for the last 20 plus years through what's called market conduct annual surveys or statements, I always forget. And people have talked about this idea, but the insurance companies have fought to keep this information anonymous at the company level, so I'm going to make it public. So it's an idea that's been floated, but making it happen will have a huge impact. Another example, we are the only state that does not allow the use of telematics for underwriting auto insurance. Every other state does. Now, there are very important privacy considerations, which I take very seriously. You need to own that data. The insurance companies need to have only an anonymous form, that you must not be able to share it in any form whatsoever. But if we get those privacy considerations right, we can use existing technology to lower cost and get more effective underwriting with positive spillover effects to boot.
Thank you. Ben Allen.
Yeah, I'd say I'm probably 6 or 7, but not somebody 6, 7, right? But not somebody who's actually a 6 or 7 as opposed to a 3, a 9, a 10, or a 20, right? By that I mean, I absolutely see the need for serious disruption in this area. But I also want to make sure we move forward in a way that is going to disrupt at a pace that will not destroy the system, and that will actually protect working people in the state. And this is an incredibly delicate situation. The market is in a very, very difficult place. And we'll need somebody in this position who has the subtlety, the nuance, the skills, the relationships, and the track record of moving forward in an aggressive, bold way that doesn't also blow up all the boxes in a way that could actually be really damaging to our economy. This is why the Consumer Federation endorsed me. The Consumer Federation vetted all of these candidates very, very carefully. They listened very carefully to all of the perspectives that we have up here. And at the end of the day, they said that Alan's got the track record, the temperament, and the sense of nuance to be able to deliver very real results for consumers, make major changes to the system without blowing up boxes in such a way that will actually harm our economy and harm consumers. And that's the approach that I'm going to be taking here if I win.
Mr. Bradford.
If telling the truth is a disruptor, then I would be a 10, because that's what you have to start with, the truth. And we haven't dealt with the truth. And much of what we've done when it comes to insurance, I want to stabilize this market, but we must first start in understanding that there's 32 other states that pay more than California. Part of the reason, again, for our increased rates is because Prop 103, something that was passed in 1988, it is working. It has suppressed rates for 38 years. But your home prices haven't been suppressed. Your car prices haven't been suppressed. Building and labor materials have not been suppressed. So we have to have a reckoning and tell the truth. And a lot of folks don't want to hear the truth. And as an elected official for 26 years, that's what I've delivered, the truth. The truth in delivering property back to the African-American family got stolen in Manhattan Beach, Bruce's Beach. I did that when people said you couldn't do that. And NIL, name, image, and likeness for sports. I told the truth. So I will tell the truth to this industry of letting them know what we need to be, as well as what consumers need to know in order to protect their homes and be better positioned to be insured. And I agree with Stacey. I don't believe this position should be elected. We're one of only 11 states that have an elected insurance commissioner. It has allowed politics to judge what folks are doing. I, too, am not seeking any other office other than that. So I won't have the political winds at my back worrying about if I make a hard decision, will it affect my next race? I'm not doing that. So you need a truth teller in this position. So if being a truth teller is a disruptor, I am that one.
There you go. We will have 60 seconds on the clock for this next question. We'll begin with Stacey Korsgaard. This is a question about accountability. Earlier this month, the Department of Insurance announced a move to suspend State Farm's license and levy millions of dollars in penalties. This after an expedited investigation found alleged violations in more than half of the LA wildfire claims review. Survey data from the independent nonprofit Department of Angels found that 70% of insured LA fire survivors experienced delays, denials, and underpayments. How will you, if elected, hold insurers accountable and prevent these types of claims handling failures from happening again?
I've been in the insurance for 40 years, basically, and insurance companies, they're bound to a contract. I'd heard State Farm complaints probably 2 to 3 months after that fire. How I would handle it differently a happy claim is when it's paid and closed. If I were the Department of Insurance Commissioner, I would have been down in the Palisades. I would have called State Farm and said, we've got a problem. We've got adjusters. It's called roulette, where some clients had 11 adjusters. It's confusing. It was so big that they bring adjusters from all over the country, but that process should have ended, a couple months after the claim. So I would hold the insurance companies accountable, but you do it quick, you do it in private, and you get the results, because at this point, no one's satisfied. And the real concern that it affects all of us, State Farm has 20% of the market share. And if they go to the point where they want to pull out, we're all in trouble.
Patrick Wolf.
Right. First of all, I'm very glad that they're finally bringing this enforcement action. State Farm, I think there's ample evidence State Farm has not been a good actor, number one. Number two, I've already talked about a couple things I want to do specifically to hold insurance companies accountable in terms of reallocating resources, overseeing how claims are paid, in terms of making that information public and so forth. I want to talk briefly about a systemic misregulation that allowed State Farm to get to this point. When the market became unhealthy over the last 6-7 years, as more insurance companies left and the FAIR Plan grew, the Department of Insurance allowed State Farm to grow its market share. The Department of Insurance also allowed State Farm to operate in California as a subsidiary of the parent without getting assurances or legal obligations from the parent to hold the subsidiary accountable. And so when these horrible fires happen, State Farm now is in a bad situation financially and does not have the support of its parent, which is part of the reason why it's acting so abominably and has been demanding a quote-unquote emergency rate hike, which is absolutely reprehensible. It's a failure of regulation systemically.
Thank you, Ben Allen.
Yeah, so as the senator who represents the Palisades, I saw the problems emerging with State Farm literally within a matter of weeks. In the immediate aftermath of the fire, as people were getting messed around with, the adjusters started getting switched around, and people were getting nickeled and dimed. We, of course, unfortunately, we're seeing similar behavior in Altadena. And so Senator Perez, who represents the Eaton fire survivors, and I put a letter forward to the Department of Insurance, to the insurance commissioner, calling on the commissioner to conduct this market conduct examination, which of course ultimately resulted in this extensive report showing all this egregious behavior. So I'm glad it finally came out. It certainly speaks to the massive challenge that we all face in dealing with this enormously important company that unfortunately has behaved egregiously. One of the many things that we're now doing coming out of this, Senator Perez and I are running a bill to go after these delays, to penalize unnecessary delays in payout, because we know that's part of the business model. You keep making money in the market, as has been mentioned, you delay the payouts, and we have to penalize that kind of behavior.
Thank you. Stephen Bradford.
I would have immediately brought State Farm into the office and called them on the carpet. The commissioner right now has the ability and has the authority to fine and penalize companies for egregious behavior, but that didn't take place. And we saw the delays, we saw the denials, we saw all the frustration. It's still, folks, 16 months after a fire damage, still waiting for their claims to be settled. And as Senator Allen stated, the department is so understaffed with individuals who are responsible for reviewing this. Again, that's why I want to come back to the modernization of the Department of Insurance and making sure the men and women have the tools, but the commissioner, he or she themselves have to respond in a more authoritative manner. They have the authority right now. They should have brought State Farm to the carpet, and due to the investigation, it clearly exposed all of the, I won't say corruption, but all the misdeeds that they were involved in, and they're now being held accountable. But we could have done that from day one. 30 days into this fire, we could have brought them to the carpet and says, why are you behaving in such a manner, and penalize them, fined them for that.
Thank you. Jane Kim.
2 rules that I want to put into place. One, when there's a total loss, you get your coverage, your total loss of coverage in 2 weeks. You shouldn't have to itemize every fork and shirt when you've lost everything. I'm listening to homeowners talk about how they're forced to itemize things, even still today, and not get their loss coverage is an abomination. Second, I want them to pay you interest every day they deny, delay, or underpay a valid claim. Just as when we're late in paying our premiums, they can cancel our coverage or assess a late fee, we should level the playing field. I mentioned this earlier, but this is a part of their business model. They actually made more money in 2025 than they did in 2024, despite making the largest wildfire claims payout in history. And part of how they do it is by not paying claims that they're contractually obligated to pay. We had this huge debate 2 years ago about Prop 36. What should be considered a misdemeanor or a felony? A couple $100, a couple $1,000. This industry is stealing billions from everyday Californians. And not only do we want to make sure that they're assessed a penalty to the consumer, we want to make sure there are large-scale fines for this egregious behavior as well.
Thank you. This next question will start with Patrick Wolf. We'll have 60 seconds on the clock. This is about the FAIR Plan.
Oh, goody.
The insurer of last resort. Recent survey data from the Department of Angels found that FAIR Plan policyholders face an average post-fire rebuild cost of more than $1.35 million. As one of our candidates mentioned, we just learned this week that starting October, many FAIR Plan owners will see their premiums go up by as much as 30%. FYI, if you look at the map, some will also see their policies drop by nearly 80%. Everything on the coast going up, everything inland going down. What, if anything, do you think is working about the FAIR Plan? If elected, how will you reduce reliance on the FAIR Plan and transition policyholders back into the private market, if you think that's the right course of action? Patrick Wolf.
I do think that's the right course of action. I don't think the FAIR Plan is working well at all. It was never designed to be what it has become, which is one of the major insurance companies in California. It's also quite poorly run compared to other FAIR Plans in other states. The only way sustainably to fix the FAIR Plan is to fix the regular admitted market. And so what we need to do is all the things we've been talking about bringing insurance companies back into California, making it much easier for them to operate here, making sure that we hold them accountable and provide transparency, all of that, reduce the risk, all of that. As that happens, part of coming into California, each insurance company needs to be required to invest in the operations of the FAIR Plan, because the operations of the FAIR Plan are not at all acceptable, and the insurance companies need to invest so that it provides better service. But then, as the regular admitted market heals, the rates do need to be allowed to adjust. What's frustrating about this rate rise is it's happening before the regular admitted market is there for customers. But we need to get people off the FAIR Plan into the regular admitted market as insurance companies coming back in.
Yeah, very much agree. I think at the end of the day, this is all going to happen. As has been said, the FAIR Plan is totally oversubscribed. It's undercapitalized. It was never structured for this kind of portfolio. And Steve, we've debated enough to know that Steve will tell you the history of the FAIR Plan in the next when he answers. But in the end of the day, I think this gets back to why we're all talking about risk reduction, all of us. I don't think we can demand of the insurance industry that they have to insure all the highest risk areas without us all putting collectively real investment, both as communities and as individuals, into reducing risk. The flip side is I don't think we can ask individuals and communities to put that investment into risk reduction without them knowing that there's going to be real reductions, real benefits on the insurance side on the back end. Now, there are communities that are actually doing this. I was having conversations with Councilmember Zwick just before, in Escondido, in Paradise even, where they're rebuilding communities in the very high fire risk zone to much higher fire standards, and they are being rewarded with lower cost insurance. So there's a way to do this, but we have to take advantage of this crisis to push for a change in policies and practices that are going to reduce risk, get people off of the FAIR Plan, and heal the market.
Thank you. Mr. Bradford.
The way you depopulate the FAIR Plan is to stabilize the admitted market. So that's what we have to do from day one. And as Senator Allen will state, people don't even know how the FAIR Plan came about. I've been the only one talking about it since the beginning of this campaign. It started in 1968 after insurance companies stopped writing for African American communities after the 1965 Watts civil unrest. And they were left with nothing but this plan. That's why it only provides smoke and fire. It was never designed for 700,000 Californians now to be on this program. I would also support the bill that Assemblymember Calderon did to issue bonds to help liquidate and provide liquidity, I should say, for the FAIR Plan. It's $1 billion overprescribed. So again, the way you depopulate the FAIR Plan is by stabilizing the admitted market and bringing more carriers back in California, because FAIR Plan is nothing fair about the FAIR Plan, and it was supposed to be the policy of last resort, but it's for many Californians, it's their only resort, and it was never designed for that.
Thank you, Mr. Bradford. Jane Kim.
So the FAIR Plan is a public mandate, but it's privately run, and it's one of the most secretive FAIR plans in the country. It has a 9-person governing board. We don't know who sits on it. We don't know when they meet. We don't have access to their agenda. We don't have any access to their institutional or risk models, and all of that needs to be reformed by the state legislature. I'm going to come back to the concept of single payer that I have talked about a few times now. The current system is what we call risk pool fragmentation, where all the quote unquote sick homes are on the FAIR Plan and all the healthy homes are on the multi-payer market. That is obviously a very unhealthy risk pool. What is a better pool is a single payer model where all the homes are in one pool where they share the risk collectively together. And if you take the profit out of the picture, then you have revenue that's held by a community altogether that can be invested again in infrastructure and fireproofing and floodproofing. And in other countries, the way they ensure that when there's a bankruptcy, that it doesn't spill out into a public liability is that if the claims are larger than the what exists in the reserves, actually everyone's payout goes down just a little bit collectively. But this is where we would make sure that no one is bankrupt from a major catastrophe, and we would make sure that everyone is made whole.
Stacey Korsky.
So I think the opposite. So the FAIR Plan, for my career as an agent, I remember probably writing 10 policies in the FAIR Plan. So right now it's blown up. Well, why is it blown up? It comes back to the fact that the last couple decades, our risk in California is out of control. We need to lower the risk. We need to I will devise a new business division at the Department of Insurance to welcome in capital insurance companies. I don't want one choice as a consumer. I want to go and look in the marketplace, 20 different options to say, what's best for me? Is it price? Is it coverage? Is it availability? We didn't have this problem. This became broken in 2023. And so the FAIR Plan, we need to depopulate the FAIR Plan, get it into regular admitted carriers, choices that you have to choose coverage and service, et cetera. So the FAIR Plan, it was mentioned that if you bring in a new admitted carrier into the market, I'm going to run out of time again.
Well, you're in luck, Stacey Korsky.
Okay.
I feel like a game show host because our next question is about increasing and expanding insurance coverage. Each of you will get 60 seconds, beginning with Mr. Allen. Reducing reliance on the FAIR Plan will require companies to write more policies. With approximately 75% of insurance policies written by 10 companies, how will you get these 10 companies to write more policies?
Well, first of all, we need to not just limit it to 10 companies. I think there's more we can do to expand the market. It's a very stultified regulatory system that has kind of kept these people in charge for a long time. There's a lot of companies that want to be in, but for various reasons that have been preventing them into the market, they are not able to enter the admitted market. And you see this vibrant, expensive, but vibrant surplus lines market, non-admitted market that's out there that people are turning to. A lot of younger entrepreneurs that are now in this space using technology and new ways of rethinking insurance that we ought to figure out ways to let in. So that's something I would say. There's some anti-competitive policies and practices in certain companies that have really stultified the market as well that, again, I want to see changed. But in the end of the day, it's about really working with the industry and sitting down with them, not taking no from an answer, not taking orders from them, pushing them hard to basically reward risk reduction and other types of policy changes that are going to make a difference in terms of their risk pool, while also ensuring that we're really protecting consumers. And that's at the heart of our plan.
Thank you. Stephen Bradford.
Again, by welcoming more insurers into the market. Right now, we make it too hard to do work in California. These businesses need certainty, and we haven't provided that for far too long, not just in this insurance space, but we've seen the entertainment market, we've seen tech leaving, we've seen people leaving California. So we make it far too hard to do business in California. So we have to be more collaborative and be willing to work in a more creative manner to bring folks in and making sure that we do have a vibrant market, because this is the third largest insurance market in the world. They want to be here. They want to be here. A small percentage of California is worth 100% in other states, but we make it many times far too hard for them to do business here in California. But again, we need to expedite the process of getting new companies admitted, new policies and new programs admitted, because that's some of the frustration. Companies have new plans they want to issue, but California will not admit it, especially in the healthcare space, even though we have very little overseeing that, but long-term healthcare, we need to do a better job of approving new programs and policies.
Thank you. Jane King.
Sure, I'm a cue.
Right now, there are only two options. Let insurers raise rates, or they exit California. Those are the only two options on the table. So as everyone on the stage talks about competition, inviting more people, that's just raising rates. And that will work for some homeowners, but for so many working class and middle class homeowners across the state, particularly in rural areas, but even in cities, they're just not going to get insured because they're not going to be able to afford the increase in rates. So again, we have to drive down risk, but we also have to share that risk. So a public reinsurance or public single payer model that just covers home disaster for all is one of the ways that we can share that risk, take that off the portfolio, and then more insurers will want to come back to California. You'll still get your home insurance on the market. They'll pay the home disaster levy to the state of California, and then we run that program as a nonprofit program that drives down risk and pays out claims quickly and fairly. In Japan, when there's an earthquake, they declare an emergency and everyone in that area gets their contents and coverage. And whatever is afforded by the reserve is what gets shared out to that community. We're already paying for it in the form of FEMA dollars and others. This is another way for us to do it.
Thank you. Stacey Korsgaard.
Thank you. So a story about 6 weeks ago, I heard from a company that called the Department of Insurance no less than 20 times. They had a portfolio of property coverage. 15% was going to be for high fire areas. The other 85% was going to be in regular towns. They called 20 times. No one picked up the phone and no one called them back. They turned their back on California. They were approved in 6 states in less than a week. What about everyone that you know that's having rising costs or they're stuck in the FAIR Plan? That is, in my opinion, it's willful negligence by the Department of Insurance. That's not going to happen. We're going to create a new business division where companies, some of the big companies that you know of right now, they might not survive. We're in literally a rebirth of innovation, creativity, and insurance companies can look completely different. in 10 years. We have to let that happen. California, we're innovative, we're strong people. We have to trust the marketplace.
Thank you. Patrick Wolf.
Okay, so the question was how to get insurance companies to write more, and the basic answer is we do need to bring more insurance companies in. We need to create a more vibrant market. I've talked about making the rate application process much more rational and streamlined, the sustainable insurance strategy allowing insurance companies to underwrite rationally. Listen, it sometimes takes over a year for an insurance company to get its rate filing approved when they want to lower prices. That's the situation we have. Obviously, rate needs to be rationally priced. Look, when I was early in my career overseeing an auto and home insurance brokerage business, we had a dozen companies on the platform, and I saw the same customer get very different quotes from different insurance companies. The lack of competition means you're not getting the best possible price from insurance companies. So we need more insurance companies in. Yes, we absolutely need to take action to reduce risk. Some of that can be done through smart regulation to align incentives between the insurance companies and customers so that we make the insurance companies tell us what will reduce risk, and the customers are told actionable actions and they get financial assistance. And the last thing I'll say is the state must take certain actions in terms of land management and other things to reduce risk statewide. That will also help free up the market.
Thank you. Our next question will have 60 seconds for each of our candidates, beginning with Stephen Bradford. It is a question about affordability, but someone in this room wrote a very lovely version of it. So we're going to go with one of our audience questions instead. We know 90% of fire survivors are underinsured. Most consumers don't want to pay exorbitant rates. Cost of construction have gone up. Is that the only reason? How do we fix underinsurance, especially in wildfire zones? Mr. Bradford.
That's a tough question because most of what we saw in these fires were people that weren't uninsured, they were underinsured. And they were uninsured because they had a policy that they had purchased 30, 40 years ago, and their agents hadn't brought them up to speed to say, hey, in order to replace your home today, it's going to cost you maybe a factor of 5 more so than it would have cost years ago. So I think we have to do a better job of educating the consumer on what their policies currently provide. I would want a forward-looking dashboard so consumers can go online to look at what they need in order to be adequately covered under their insurance policy. Many are in the dark. Many assume that I had insurance and my home would be covered, and they weren't. So doing that. Also, again, working with the agents, it's over 700,000 agents and brokers here in the state of California. Having a better relationship with the Department of Insurance and making sure that they go out and educate their consumers, but they do a better job of making sure that right now renewals is no more than a click versus sitting down with them and saying, hey, here's where you're lacking. This is what you need to do to harden your home to make sure that you're more insurable in order to bring rates down.
Thank you.
Premiums down.
So this just comes back to the question of what people can afford. So even if we educated homeowners about the better form of coverage, they just may not be able to afford that higher form of insurance. So again, the only way to make insurance more affordable and more available is to drive down risk. We can talk a lot about choices, but most consumers I know are extremely busy. They don't have time to research 10,000 different policies. And it often doesn't work out for them. They often choose the wrong one because it's all very confusing. And by the way, that is by design to make people pay the most for the least coverage possible. So we again have to prevent the wildfires from even happening in the first place. So again, we need to claw back some of the revenue, invest in driving down risk so the wildfires don't even happen in the first place. But just saying more coverage, more education, that's not going to work for the vast majority of homeowners in California that already cannot afford to pay more in insurance.
Thank you. Stacey.
So I've had this problem my whole career. When I would input the information in a house in the computer and it pops up a recommendation, the price per square foot for repair, to me, it always seemed low. So it's important to have a relationship with your agent, but I also think that the insurance companies have a lot of responsibility here. They can dissect what the labor costs, what the construction costs are, and input that and feed it into the programs that the companies have. I think it's a great idea to update the dashboard to give consumers an idea of what the replacement costs are in that area based on maybe your county or your town. But this is a valid concern for homeowners, and I would definitely address that as a commissioner. It needs to be fixed.
Thank you. Patrick Wolf.
So the problem of underinsurance is a really pernicious one. It exists across the United States. It's existed for decades. There's actually been very good analysis on this. The reason for underinsurance is there's essentially a monopoly or a duopoly of software providers that provide the estimates to insurance companies for what that rebuild cost is going to be. Now, short of taking sort of competitive action against the software industry, which might be interesting, but it's not the insurance commissioner's job, what the Department of Insurance can do is the Department of Insurance can provide information to customers because they have that information on a statistical basis of how likely you are to be underinsured by a certain amount. And that information needs to be made available at the point of sale every time you buy, every time you renew. And the insurance companies need to be required to disclose the information that they have, because if the insurance companies do have better information about whether you're likely to be underinsured and not providing that to you at point of sale or renewal, they need to be held accountable in court.
Thank you. Ben Allen.
Yeah, I mean, I agree with everything that Patrick just said, except the fact I think the insurance commissioner ought to go after some of the antitrust issues involved with the software because it is causing. All right, let's go work together on that. Now, the other broader question is just the lack of transparency. I know exactly what I'm going to be paying on my home payment in August of 2036. I could look it up right now. And I was, the number of the paperwork that I got when I was purchasing our little condo, all of the transparency that really broke down exactly what I was getting and the terms. That's for a multi-year, 30-year mortgage. Think about these insurance policies keep changing year by year. It's oftentimes a very quick process. I think the insurance commissioner ought to help to implement a much more transparent system where it's very clear exactly what you're getting with regards to smoke damage, all sorts of different types of fire and water damage, right on a term sheet that is easy to understand and not document page after document page of legalese, which is the current status quo. We can make this a much more transparent, easily to understand process, and I think the commissioner ought to drive that.
Thank you. 60 seconds for this next question. We will begin with Jane Kim, and we'll fold in another one of the great questions we received this morning. Insurance companies have cited the state's regulatory framework, particularly around rate approvals and catastrophe modeling, as a barrier to doing business here. What specific regulatory changes would you pursue to encourage insurers to re-enter and expand coverage in high-risk areas? And looking at high-risk fire zones, are rates too high or not high enough?
Well, the final question depends on for who. For homeowners, it's too high in comparison to what they can afford to pay. And for insurers, it may not be enough because they want to make sure that their reserves are solvent. We have a problem where people can't afford the risk that may be justified in their premiums. And then we have insurance companies that want to make sure that they're covered. And it has to be a balance of somewhere in between. And I have to come back to the fact that this industry is doing very well. The last 3 years, they've been recording record profits by raising our rates on the healthy homeowners, canceling coverage on the homes that they considered risky, so that's already off their risk pool. And then third, again, by delaying, and underpaying our valid claims. So we have to find a balance. And this is, again, why I keep coming back to the state having some form of intervention. I think this is the only market solution to stabilizing the market. We have to figure out a way to create some type of safety net pool so that everyday homeowners will get something in the case of a catastrophe, and everyone that can afford it can get supplemental insurance on top of that.
Stacey Korscott.
So in 1988, we voted in Prop 103 very narrowly. And one of the provisions, it said that for insurance companies to determine rate, they used models looking backwards. They had to look at predictive modeling, but yet you looked backwards. But just imagine in the last couple decades where risks have gone up, we're in a rising risk environment. And then the Department of Insurance has suppressed rates. It's a recipe for disaster. There's a thing called the Sustainable Insurance Strategy that's been implemented, and it's now going to allow the Department of Insurance to look at forward modeling. We'll now be able to look ahead. The insurance companies will look ahead and say, this is what we're predicting. It's a hotter, drier environment. This is what we predict. So just imagine if we had a Department of Insurance that told the legislature and the governor, we need to lower risk. We're going to bring more insurance companies into the state of California to work for your business. And then we can make predictive modelings that are going to show that there's a lowering risk in California. That's a recipe for lowering costs for consumers.
Thank you, Patrick Wolf.
So let me pick up on the sustainable insurance strategy. It was not actually written into Proposition 103 that insurance companies had to use a 20-year look back as opposed to forward-looking model. That's simply how the regulations were written. So the sustainable insurance strategy is an effort to modernize the way insurance companies can use forward-looking predictive modeling and also count the cost of reinsurance, which is insurance that insurance companies purchase, which actually expands the addressable market. So all of that is good and necessary. There are some serious problems with the way the sustainable insurance strategy has been implemented, having to do with trying to require insurance companies to underwrite in risky versus safe, which I don't have time to go into, but at any rate, there are issues that need to get worked out. But fundamentally, we need to keep moving forward with regulatory modernization. There are and also, of course, all the risk reduction stuff that we've been talking about, right, which is super important. Now, there are cases where, for equity reasons, we will want to provide subsidies to homeowners, and that needs to be lifted up and presented to the legislature, and that's part of the job of the insurance commissioner.
Thank you, Senator Allen.
Yeah, these are all issues that I've been working on for some time. We just got one important step that we just passed last year in the legislature was the creation of a public modeling system, which can help to predict risk and help to inform the actuarial process associated with risk in its nexus with insurance. It's really important for us to do that because if we allow the insurance companies to start using predictive data, but they keep that data closed and proprietary, then there's no opportunity for the public to engage and understand. And that opacity is a real concern to folks who care about consumer protections. And so we wanted to create an independent public model that was informed by academics and experts that could be a baseline that's truly independent and it's not run by the industry. And I think that's going to be really important. The other thing is I was the lead author of Proposition 4, which we finally passed just the last election. I've been working on that for years, but that is now finally putting the resources in to significant risk reduction. $3.8 billion on wildfire risk reduction, our healthy forests, the community resilience projects, water infrastructure, firefighting infrastructure. That's going to make a big difference. That gives me a lot of hope for our future.
We need to leave it there. Stephen Bradford.
And I would echo regarding the sustainable insurance strategy because again, it's using catastrophic modeling so we can determine or better predict where there might be natural disasters as well as man-made disasters, and also in the mitigation factor. If homeowners take the proactive measures to mitigate and do the resiliency and do the vegetation management in order to write insurance in California, the insurers will have to agree to reduce premiums for those families who have taken those proactive steps in order to write policies in California. They would have to agree to that. That would be a standard in the Department of Insurance. And many times we are constantly penalizing homeowners who can't afford to do the mitigation. We have what is called the COIN division in the Department of Insurance, California Organized Investment Network. I would help those families, use that resources to help those families who can't afford to do the mitigation in order to guarantee the premium reductions to do the home hardening. Those dollars are available, so I would make that available to consumers.
Thank you. 60 seconds from this next question, beginning with Stacey Korsgaden, a question about rebuilding that's come from one of our fire recovery community groups. Many wildfire survivors report that after the federal debris removal is complete, they are still left responsible for substantial remaining cleanup and rebuild costs, including damaged driveways, retaining walls, fencing, pools, and contaminated materials. In many cases, insurers require homeowners to pay these costs up front before reimbursement. What changes, if any, would you pursue to ensure that wildfire survivors are not forced to front significant out-of-pocket recovery costs?
Absolutely. So the insurance policy, it's a contract, and If the insurance company is delaying or denying a coverage that's on the contract, that's unacceptable. And one of the most important roles of a Department of Insurance as commissioner is to hold the insurance companies accountable for the contract. So the big problem that I see with the Pacific Palisades is the denial or the delay in payment of claims, and also the concerns. That was a very dirty fire with contaminants. And if you scraped off 6 inches of soil, I personally would have a real problem and concern going back there and building. So I think this is a bigger problem than this local issue. We might need to look at provisions and changes in the policies, maybe some kind of fund so that we can clear the land to make sure it's safe for people to rebuild. So it is a big problem, and I think that it can be solved with collaboration.
Thank you. Patrick Wolf.
Thanks. Let me talk about 3 things briefly. One is we did talk about underinsurance. I think this is just an illustration of how important this is as an issue. It's really, really important that we address this and make sure that people have the information they need and are prompted in the right way, and insurance companies are held accountable to make sure that people have the full coverage that they need. Second point around smoke damage. Some of the damage that we're seeing in these wildfires comes from smoke damage that's unlike anything we've seen before. There's a smoke damage task force that was stood up. It was unfortunately somewhat compromised because it was too heavily tilted in favor of industry, but they did at least put forward fact finding that's now before the legislature. I know they and the Department of Insurance are working to put together a bill to standardize, codify smoke damage, and so that hopefully comes quicker. And finally, when we have these wildfires, there's a shortage of resources, and I think that needs to be addressed in terms of coverage terms and in terms of making more resources available more quickly when there's a scarcity.
Thank you.
Yeah, this question gets to my reason for running. I just got a chance to see this type of behavior up close, and I was really appalled because I saw how much people that have been paying into the system for decades were getting screwed with, and it was really harming, and it continues to really harm the recovery and the ability for these communities to get back on the ground and back on their feet, and rebuilding those communities and making them once again thriving parts of our broader Southland region. It's why I am working on all this legislation right now to increase the enforcement powers against this type of behavior for the Department of Insurance. We actually have come up with an alternative bill to the bill that was proposed from the department, because I agree with Patrick, it was too compromised with regards to standards, really independent standards on smoke damage that are independent and that have real integrity. And then also the delay penalties that we've been talking about, which is a bill that I'm working on with Sasha Perez, who represents the Eden Fire survivors. From my perspective, it's about making sure that we have strong rules in place, and then somebody in the commissioner's position who cares deeply about consumers. If I'm elected to this position, I'll be the very first commissioner in history who actually came from a community that was hit by a major natural disaster. That experience is seared into me, and it motivates me as I run for this position.
Thank you. Mr. Bradford.
Again, you need a commissioner who's going to be a watchdog, not a bystander, that's going to make sure that these companies live up to their obligation, as many of these families have done. They've paid their premiums for years, did everything right, and then when it comes to getting a claim, they're being denied and being disappointed. We should not allow that to happen. Again, I will lean back on the COIN division of the Department of Insurance for those folks who could not afford to do the clearing afterwards, the debris afterwards, and they can't afford to do it themselves, even though I think the insurance company should fully cover that. Use the resources within COIN to help these families clear the debris after a wildfire in their neighborhood. And have a better relationship with the federal government too, because we have a president who cut FEMA funds that could have helped many of these families. So having that relationship to use, making sure FEMA dollars come back into California in a real and meaningful way would easily aid many of these families who wouldn't have to go out of pocket to do the claim. And they still haven't, exactly. FEMA still hasn't been paid. So having those two things I would advocate for. Thank you.
Thank you. Jane Kim.
Which comes back to my point that the public is always going to be the backstop of these catastrophes, whether it's through a single payer home disaster for all insurance model, or taxpayers and others paying for it via FEMA and other state and local funds. So to come to the enforcement piece, this office was created in 1988 and passed by the voters of California to elect an independent consumer watchdog to oversee this $3.3 trillion industry with zero federal oversight. That is who we are electing. We're electing a consumer watchdog. So someone with that experience and history and also policy leadership to pass ways to solve the insurance crisis, not just sell it. That's not what this office says. It doesn't sell insurance. It's trying to solve the insurance crisis and bring a broad coalition of folks together that's going to move us forward so that we're not in the same position 5 or 10 years from now that we are today. So we have to drive down risk. The average homeowner has $8,000 in their bank account. Right? That's not enough to cover $20,000, $30,000 in improvements. So we, again, have to identify a revenue stream, make it available, and again, prevent these risks and enforce the good rules that we have in place in California to enforce against this industry to play fairly with consumers.
Thank you very much. As we get to our last question of the afternoon, as someone who moderates plenty of debates and forums, it is lovely to see so much cooperation and agreement and head nodding. Perhaps think of this. Yes, sure. Perhaps think of this last question as an opportunity to also describe how you differentiate yourself from the candidates on the stage. The final question is this. We will begin with Patrick Wolf. What does resilience mean to you?
What does resilience mean? Well, I'm going to use this question as an opportunity to differentiate myself. But before I do that, I think the people who have suffered through the fires over the last year and a half are showing resilience. I cannot even imagine what it is to go through that. And I've met a number of them. I live up in San Francisco. It's not my community, but I've had the privilege to meet many of those people. And I am honored and heartened by the strength that they have shown. So that is what resilience means to me. Now let me differentiate myself from my competitors. So I am very proud that of the 4 major editorial boards in California, I have been endorsed by 3 of them, including my hometown newspaper, the San Francisco Chronicle. I am not a politician. I do not have 10, 15, or 20 years of relationships and experience to draw upon with various special interest groups. But the editorial boards that interviewed all of us, the majority of them have endorsed me because they see my seriousness of purpose, my dedication to the job, and the qualifications that I bring, and I'm very proud of that. I don't know if that means resilience, but I did want to say it.
Thank you. Of course you did. Senator Howland.
Yeah, I mean, resilience means everything from what the strength of the communities that were mentioned to the broader goals of reducing risk and making sure the communities are less susceptible to terrible, disastrous fire. And there actually are ways to build communities that are much less susceptible to fire. We're seeing it happening right now in communities up and down the state. Escondido, Paradise, it's being rewarded with lower cost insurance. There's a real path here that I think can make a difference. The other editorial board endorsed me. And they made the point that, we've got some smart people running for this office. That's very clear. But there's one person here who's got a long-standing track record. It's not just promises. It's not just ideas. It's a track record of getting difficult work done through the legislature, pro-consumer legislation. In the end of the day, every single one of the big ideas we've been talking about here go beyond the delineated powers of the insurance commissioner under Proposition 103. It's going to take somebody who knows Sacramento, who knows the legislature, who knows how to manage, who can actually get difficult things through. I'm endorsed by the vast majority of my colleagues in the legislature, including the legislative leadership, the Consumer Federation, the firefighters, Senator Schiff and Padilla. These people know me. They know my track record. They know where my heart is. They know I can get things done. They also know that I have the on-the-ground experience of a truly resilient community in the Palisades.
Thank you. Stephen Bradford.
Resilience is showing up, standing up, speaking up, and pushing back, not taking no for an answer. And I'm going to differ with my colleague Ben Allen here. I passed more legislation than everybody here combined, and real meaningful legislation in my 14 years in the legislature, serving in both houses, being one of the only individuals to serve what's called the Problem Solvers Caucus, which is bicameral and bipartisan. And we took on some of the toughest issues in the state of California, and we got them done. And I asked, don't listen to what someone tells you you're going to do. Look at what they've done. I challenge you to look at my 26 years, my 14 years in the legislature. I got elected to Gardena City Council 26 years ago because the city was on the brink of bankruptcy. Why? Because they started their own insurance company. 12 years when I left, the city was solvent. We avoided bankruptcy. We had no money in the bank when I got to the council. We had plenty of money in the bank when I left. That's what resiliency is, standing up to the institutions who told you you couldn't do it, having the courage to show up and put on the good fight. That's who Steve Bradford is, and that's who I'll continue to be.
Thank you. Jane Kim.
When I think about resilience, I think about how we can't just be thinking about the year ahead of us, but 10 or 20 years from now. And we spend a lot of time talking about how homeowners and taxpayers and the insurance industry can pay for all the risk that is coming forward, but we haven't actually talked about who's causing the risk. The fossil fuel industry has accelerated climate disaster, and we have not talked about how we're going to hold that industry accountable. And so I mentioned the billion-dollar storm every 3 to 4 months and how we now have one every 3 weeks. We know this is going to continue to happen unless we truly address this issue. And right now, the insurance industry is a huge institutional investor of fossil fuel and huge underwriters of fossil fuel, driving climate disaster. And then they cancel coverage on the homes destroyed by it. This is the type of fiscal short-term thinking in our country that is going to make this an unlivable state and country for our future generation. So resiliency to me means not just allowing insurers to have a 20-year forward-looking catastrophe model, which is fine, but actually getting them to think about how we're going to drive down risk for everyone. And that's why a strong state intervention is going to be so important in building a coalition that's going to address the long-term future for our state.
Thank you. Stacey Korsgaard.
So Stacey Korsgaard, and when I think of resilience, I look at all of you. We are still in California. We're tough. And the reason that we're here is that we love this state. I've gone all over the state of California and people are hurting. And insurance, I truly believe, is the last straw. With the FAIR Plan, the rates going up 29% on average in October, soon to be in the high wildfire areas, it could be as high as 200%. We need someone that knows insurance. For 40 years, nearly 40 years, I have helped families and businesses navigate the complexities of insurance. I know what I'm doing. They've stayed with me. A lot of my clients stayed my whole career. Why? Because I fought for them. And I want to fight for you up in Sacramento. This is a fixable problem, and it can happen fast. It's going to take someone that knows what they're doing. My name is Stacey Korsgaard, and I'd be honored to have your support and vote. Thank you.
Thank you so much. My thanks to all of our candidates for making the time today. My thanks to Mary Leslie and the LABC. And one last thing before we go. If you want to share what you heard and saw today with your friends, with your family, we encourage you to do so. You can revisit today's discussion at the LA Times studio platform through Election Day. June 2nd is the last day to vote. The vote centers here in Los Angeles County open on Saturday. Thank you all very much.